Okay, welcome back. Pharma in focus, right? Aditya Khemka is now with us, a fund manager at Incred Asset Management. Aditya, good morning. Good to have you back. Prashant here. I want to start with what is the hottest topic of discussion. I mean, if you are in you're talking to your GP or doctors, etc. I mean, I've been GLP-1 and all of the excitement around this new oral drug of Eli Lilly, right? And decently high efficacy in terms of course, the test was for type 2 diabetes. The obesity longer run tests will now happen. But still, even in this, 8% weight loss, etc. So very effective in that sense. What are the implications for Indian listed stocks here? There's a Citi note this morning, Aditya, talking about how Divi's perhaps is the big beneficiary out of this. So talk about that, Divi specifically. And second, talk also about two other companies. One is OneSource, there's one more company, right, which Shelly Engineering. So one does fill finish, the other does sort of plastic components. So these three names to begin with. Aditya.
Yeah. Thanks for having me, Prashant. So firstly, just to be very clear, I think the GLP-1 market is going to be extremely competitive. And, there might be players who will be, the first movers for the first 6 months or 1 year, but then, there'll be a whole bunch of companies jumping into the market, especially where the injectable product goes. So your fill finish players, your API manufacturers like Divi's, they will all have, significant competition over a period of time. But yeah, initial 6 months to 1 year, they might have some sort of a exclusivity window where they'll make some money, but then the revenue stream dies off. So as an investor, when we look at cash flows, we don't look at 6 months, 1 year cash flows, we look at 3-5 year cash flows. And there, our estimates don't really change because you have these one-off kind of opportunities hitting the P&L and, helping you in any form or fashion. As far as Eli Lilly goes, yes, the innovator might make some money out of this because it's an oral drug, and the oral drug, therefore, have a much higher ability to penetrate the market than the injectable does. And yes, so Indian branded generic pharma companies, they might in-license the drug from a Lilly and they might sell it, with their own brands on the label, and they can make some money on that side. But as far as the manufacturing side goes, be it Divi's, OneSource, Shelly, and many others, who are claiming to be a participant in the GLP-1 markets, I would not have very high hopes for them.
But why is that, Aditya? I mean, it's a big market. It's not just weight loss, right? There are studies which are, I'm just want to clarify, it's such a controversial topic, right? I mean, and doctors get all riled up when you ask them. Some are strongly against it, saying, well, what about the long term? These are new drugs, side effects. I don't know. We're not medical doctors. So there's no opinion on whether one should take it or not. But purely from a business standpoint, there is the obesity part, but also there are studies which show, it's effective in treating so many other ailments. Neurological, for example, etc. My question is, and these companies are, so I have a specific 2 or 3 questions. One, will oral dent in the injectable GLPs? That is one, in your opinion. Second, if it's going to be the biggest drug ever, globally, I mean, this category of drugs, why won't it be a lasting revenue stream if Indian companies are able to get into various parts of it, either the components or the fill finish?
Exactly. Yeah. So first of all, will the oral be better than the injectable? Given that everything else is the same in terms of side effects and efficacy, yes, oral will be more successful than the injectable. But that's subject to the side effect profile and the efficacy profile, which I don't think we have a head-to-head comparison yet. So it's too early to call that. But if it is the same, then oral will definitely be more successful commercially than the injectable product just because of the ease of dosing, right? Now, why, we don't expect the manufacturers or the Indian pharma companies to be beneficiary in the longer term? Because in manufacturing of pharmaceutical products, it is never the demand, the size of the demand. It is the size of the supply that dictates how much money you make. So the demand can be 100 units, 1,000 units, 1 lakh units. If the supply is 150, 2,000, and 5 lakhs, then nobody makes money. And I think that is exactly what GLP-1 is going to be, because no matter which pharma company I speak to, GLP-1 is the first growth driver they talk about. And that's what tells me that nobody is going to make money. Let's take a journey back to 2011. Atorvastatin, Lipitor, was the largest selling $14 billion drug in the market back in those days. and nobody made money. Only Divi's and I think only Dr. Reddy and Ranbaxy and Teva made money for 6 months, and then nobody made money out of atorvastatin. So I think it's pretty much going to be the same thing here.
You think, so again, to take off on that point, do you have specific numbers on the capacity? You said supply more important than demand. Do you have size of supply right now? For example, let's take this, the components, for example, or let's take the API, which DVs will get into.
Yeah.
All these companies, this is all anecdotal, right? They all are excited, but are they really being able to do anything about it? Because Eli is not going to work with everybody, right? So it's hard to kind of get on board with in licensing or whatever as well.
Yeah. So look, none of these pharma companies will call out their capacity for a given drug. Many of their capacities are generally multi-purpose. So they can be used for a given drug or other drugs at any point in time. And hence they cannot sort of call out a dedicated capacity for a given product or a given therapeutic segment. And hence, we do not know how much capacity is chasing the demand here. But what we do know is that the number of companies chasing it is very high. So even if each individual company on an average has a certain capacity, then it will outstrip the demand. And this is not new. This has happened at least 5 times in the past 20 years that I've been looking at pharma. It happened with aripiprazole, it happened with pantoprazole, it happened with atorvastatin, it happened with rosuvastatin. So we have seen all these large multi-billion-dollar drugs translate to nothing for generic players over a period of time. Initially, they do contribute some number, but then they translate to nothing. It's happening to Revlimid as we speak. Look at what happened to Natco in the last quarter. It's just the nature of the beast. You cannot make money in these large drugs because of the large number of players who are interested in these drugs. And then, when you come to the marketplace, it's cutthroat competition. Nobody ends up making money in the long run.
Okay, got that. Let's talk about 2 other names. One is Lupin. There is this big drug going off patent, a big opportunity. So any thoughts there? And then just run us through, if you have any thoughts on Syngene, pretty poor numbers.
Absolutely. So let's take up Lupin first. I think the drug that is going off patent, Lupin has a play in it. But that is already part of our estimates for Lupin. So, it's not over and above what we were expecting. So let's see, how the business sustains. But again, Lupin has a limited competition window there, and after that there will be competition. The drug will not be a sustainable revenue stream for Lupin as well. So that 180-day exclusivity that they have, that is basically the period where they will make some extraordinary money, and then it will fizzle out. And such revenue streams and profit streams cannot be given a multiple simply because it's a half-year revenue stream. It does not deserve a multiple. Now coming to the second company, which is Syngene. So in Syngene, I think what has happened is that the order flow that they were expecting has not been up to the mark. They have maybe lost a couple of customers or some orders from a few customers because these customers have opened captive centers here in India, and hence switching some of the demand from Syngene to their own captive centers. And that is something which is sort of creating a challenge for revenue and margins in the near term. Having said that, from a longer term standpoint, I'm not so worried about Syngene. Again, it goes back to sustainability, where we feel that, the China Plus One is clearly something which is playing out. Syngene is a front runner in the Indian CRO CDMO space and should eventually benefit. What we feel is that the current environment and maybe even the next 2 or 4 quarters, you may be looking at Syngene as more of an aberration than the rule. And I think once they get their act together, definitely there has been some mixed execution at the company's level, But once they get their act together, I think the demand in the market is too big for them to sort of grow in single digits. They will definitely come back to double-digit growth, subject to them getting their demand, their act together.
All right, Aditya, a quick conversation. Thank you very much for joining us, and we'll have more of these as we go along and we track developments, especially on the GLP-1 side.